The UK's inflation continues to rise, even more than expected. Is this a sign of what is to come with the United States? Because the UK coincidentally cut interest rates not too long ago, and now they are seeing the price of cutting interest rates just too early. So, is this going to send a major warning shot to the Fed that you need to be cautious when moving forward? Or is this just the UK being the UK and not being fiscally responsible? Let's dive into all of this. But first, let's go directly into how the UK announced inflation in July at 3.8%, where it unexpectedly went up yet again. Economists did not expect this. Huge employer tax increases, minimum wage up 7%, business rates jump, companies collapsing, reducing supply. But as per usual, nobody saw it coming. Well, this is why you guys come to this channel and you hear me rant about what is going on in the economy because, hell, this is something I'm very worried about with the United States. We'll get into us in a minute, but a lot of this is coming from airfares, at least allegedly. That's what they're saying, right? It's all about the airfares. It reaches peak in September before beginning to fall back to its two rate, but it keeps on going up. The increase was mainly driven by soaring airfares, which drove by 30.2%. Higher school holiday prices. Meanwhile, food price inflation rose by 4.9%, driven by higher priced goods, including beef and instant coffee and orange juice. I get with the beef, but I mean, the instant coffee, I mean, come on, what are we talking about here? In the past 5 years in July, the price of food and non alcoholic drinks has risen by 37%. But yeah, you know what? The inflation, it's all fine and dandy, right? So we're seeing the UK inflation pick up hotter than expected, and it's absolutely skyrocketing. And so you have to ask yourself with this, right? What are we going to be looking at here going forward? Is there going to be some sort of issue with inflation globally, or is this just a one off UK issue? Now, when you kind of take a peek under the hood, you know, the UK and the US have a unique relationship. And, the UK's inflation rising hotter than expected. Well, that forecast will potentially see upwards of 4%. Now, when the 4% comes and hits, well, will the UK actually cut interest rates? I mean, they cut interest rates back in August, and now they are starting to see the underlying effects of this. So, another interest rate cut likely looks increasingly unlikely after this higher than inflation print that we're seeing here. So, the UK, let's backtrack, cut interest rates in August, and inflation, in fact, wasn't under wraps. Inflation, CPI, PPI, whatever they're reporting here, increased on all accounts, and now they're saying, oh, no more rate cuts anymore. That's where I'm very worried about with the United States is the market is already pricing in at least two rate cuts, potentially three with all of this now. And so if the UK is pricing in or priced in a couple of these rate cuts already, and now they're unlikely to do this, well, that's going to send the market tumbling. So at least the market in the UK is probably going to respond in such a manner. And what we see is the inflation rate around the globe is still running hot. And so inflation never really got under wraps. And then we're trying to cut interest rates. Well, that liquidity is just going to send a bunch of inflationary concerns around the globe. And I think the Fed needs to be watching this situation very closely because expectations have shifted now following the BOE's August meeting when it became clear the central bank remains highly wary of easing too soon, which has been Powell's MO. Is he going to ease sooner rather than later? But analysts have said there's still a possibility of another reduction in November if price rises remain in line with the BOE's own forecast and the labor markets continuing to ease. Well, we shall see where that goes. What we are seeing is that wholesale prices and the US PPI not too long ago rose a little bit more than expected. So this is why I've been screaming from the top of my lungs here to tell you guys, hey, we need to be very cautious when it comes to lowering interest rates, at least with the United States and the Fed being the main, let's call it, driver of this inflationary potential spikes. Now, I'm going to keep getting into all of this, but make sure you guys are hitting that subscribe button for me. I'm 9 away from 300, so help me reach this by the end of this video. And we will be still humming along as we're seeing that the PPI in the United States rose against its forecast, and they always seem to exclude that food and energy. Who knows why they keep doing that, but that index was up 0.6%, even though we start to see those issues. Now, let's take a backtrack. The US and the UK's economic relationship is basically traditional goods and services and substantial foreign direct investment and a quote special a relationship that extends to security and defense cooperation. While the UK is a major trading partner for the US, their economic ties are evolving in the context of Brexit and increasing geopolitical tensions. So we start to see this, right? The background here from 2025. I mean, we've seen the trades. I don't know if it'll let me zoom in on this, but we start to see the tariffs and everything start to come to light. And we'll dive into the tariffs in a bit. But this PPI being higher than expected in the US should essentially show you guys that, hey, you know what? With the US, we are not having inflation under wraps. We are starting to see inflation rise up a little bit, similar to what is going on in the UK. Now, usually they say that Canada is somewhat of a proxy for the United States, but on the flip side of things, I think we need to take a close look at what is going on across the pond. And, even at home, when we see these numbers start to rise and the CPI, the inflation, not going away. And so from this, right, Trump, his sweeping new tariffs are fueling stagflation. This is a word that we've been seeing tossed around here a lot more lately, right? So we're seeing the potential of the economy not going through hyperinflation or anything like that. Just being very cautious with what we're seeing here going forward. So with that, some economists are cautioning that Trump's sweeping new tariffs and US trade partners, which took effect, can increase the US economy to enter a period of stagflation. So it describes a period of high prices and low GDP growth, such as economic doldrums of the 1970s. So we've been looking at all this and essentially saying, hey, you know what? The US is going to grow its way out. That's what the narrative has been. Grow the way out. We're seeing some issues here and there, but we'll just keep growing. We'll be all right long term. Don't worry about us. We'll be all fine and dandy. Reality is that maybe, just maybe, we will not grow out of all of this just yet, right? It's going to take some time to get this, the manufacturing back on US soil, get these jobs back up and humming. Not everything is going to, move at the snap of a finger like people are thinking. And so we have this kind of mindset and the ability to move capital very quickly now, and that is a positive and a negative. When there is any sense of the word of, some issues here, that's when we start to see people move their money out of banks. And that's why we saw that bank run that caused Silicon Valley Bank to just explode and blow up. So we have to keep looking and taking a peek underneath the hood, because this data, although it is, reported, a few weeks afterwards, the market kind of tries to project how these things will come out. And, right now we're getting headlines like this: the US will dodge a recession, but the policies will slow economic growth, which is essentially calling for stagflation. So a lot of people are seemingly hinting at this, although they are not outwardly saying, hey, look, we're going to get stagflation here. And so we have to watch very closely just how quickly we see the United States kind of try to claw their way out of this. So the slow economic growth will push up inflation and stop short of causing a recession or stagflation, the dire scenarios that forecasters envision. The totality of the policies do not push the economy to the brink of a recession, but it significantly diminishes the growth. Well, that's kind of, what we've seen. We've seen the Dixie have the worst start in like 30 years. No, maybe 50 years, excuse me, until like 1973, a couple years after we went off the gold standard. For some reason, I'm always living in the year 2000, man. Maybe it's just because I think I'm still young, but we're starting to see the Dixie just come on down. And we got some people in the chat blowing it up saying the banks do not make it difficult to take my money out. Max daily withdrawal limit, business hour ends at 3. Jesus, man. Where are you? Are you on the West Coast? Because if you're on the West Coast, maybe I guess I get that. But man, that is crazy. 3 o'clock. If you're on the East Coast, you need to find a new bank. The headline and core inflations are always looking tough, and they're always taking out the food and energy prices, right? And so they say it can't control it. I mean, it doesn't make any sense whatsoever. They're saying, "Hey, you know what? Here is the inflationary numbers. Let's take out exactly what you need to live, and then we'll see what inflation is," right? And so, what tariffs have been announced and why? The tariffs charged on goods in other countries, typically the percentages on the product value, but a 10% tariff has essentially been put in on all of them, and a 50% tariff on steel and aluminum imports, 50% on copper, 25 on foreign made cars. This is essentially just to make sure that everybody's starting to buy more American goods. And, it's interesting when we see, England start to, let's say, show massive amounts of inflation. And then we see this here, the CME group projecting now an 81% chance that the Fed cuts interest rates. We've seen this from times that I've done the live streams all the way to rising up of the potential of of 2 rate cuts coming in. And then now we're starting to see, hey, you know what? It actually might not be 2 rate cuts. What we might actually see is, you know, is just 1, but only an 81% chance. We keep falling every time every time we keep looking at all of this. So it's interesting that this is continuing to go and really start to, you know, take light of all of this. But it is very, we're in like a very bubbly time, at least it's what it feels like. The S&P 500 is still humming along. It recently hit all-time highs. And we had Bitcoin, for those in the chat, saying Bitcoin hit all-time highs not too long ago. Assets are humming. And we've got a lot of, dents underneath the hood. I mean, I went over housing the other day, and now we have the UK potentially looking at some of these, big negative types of GDP growths. I mean, like, look at this. The UK GDP grew by 0.3% in Q2. June posted a 0.4%. And payroll jobs have fallen by 164,000 in a year. And it just starts to slowly, collapse all of it. And that unemployment rate starts to increase in the UK. All of this happened after they lowered interest rates, right? So, lowering interest rates, although we think it could be a big positive here going forward, at least for asset prices in the short term and for other things, it's not necessarily good. So we need to be very cautious with the way we're analyzing and looking at all of these things. So make sure you guys are smoking that like Cheech and Chong, and hit the subscribe button. Help me get to that 300 mark, please, folks. I beggeth you. And keep hitting that like for me. For some reason, I think I got trolls that keep coming and disliking every single video. So I hope you guys come and like this stuff. And let me know in the comments what you guys think. Do you guys agree, disagree? I love to hear you guys get a little bit more interactive with me in the comments. And thank you guys all for coming out.